struggling with prop firms? Let's go.
Hey guys, welcome back to my channel. My name is Don Aslam, and today is going to be an interesting one, guys. How to be the 1% and not the 99% in trading. Well, at the same time, guys, we're going to be going through the break and retest as well. I've already marked out some of my winners, well, all the winners, and I'll be also, what I normally like to do, guys, is look at this. Let's chuck in minus 15% just to give the market the benefit of the doubt, you know, and we're also going to add more losses, but I'm just going to give the market benefit of doubt of minus 15% regardless. Now, another thing I'm going to be going into, guys, is 1 minute. Now, break and retest, guys, happens on all levels, on all scales. It happens everywhere. Futures, right? Bonds, cryptos, currencies, whatever you want to call it, Bitcoin, I don't know, you name it, it happens, right? Now, even it happens on this, happens everywhere. Not just that it happens everywhere, guys. It happens, you know, every time on the bigger time frames, on the smaller time frames. I'm just zooming here. Let's pick up something. So I've already marked out the key levels, but look at this. Even look at this, guys. I can see it straight away. When you trade the break and retest as long as I have, something just starts standing out, sticking out to the eye. Resistance, rejections. We got multiple rejections here. Let's even grab another one here, and look at this. Now, what is the difference, guys, between this huge zone here that I've marked and these small ones here, right? Because it's a smaller time frame, you're going to get fake outs. You're going to get, you know, like here, look at this consolidation. You're going to get fake out. You're going to get noise that you don't want anything to do with, because it's just going to give you false entries. But my message is, you know, it happens all the time. The break and retest, it happens all the time. To avoid it, it's being said like other strategies like SMC. Hey man, nothing against the guy's strategy, ICT strategy, nothing against him. You know, he's made it work for himself one way or another. But it's like, hey man, I'm not here to build a rocket. I'm a simple guy, you know. I'm not here to learn rocket science. I'm a simple guy. I want to learn a simple strategy, and I just want to make, you know, some decent amount of money to put bread, you know, food on the table, and that's the whole idea behind it. You know, I'm a family man, and that's all I want to do, provide for my family. Now, look at this, guys. Rejection levels, which I've already marked out. So look at this. Fake outs, forget all this. But look at this. Breakthrough, you know, respected. Price comes back down. Remember, this is on smaller time. This is smaller movements. Why? Because obviously now this is no man's land. This is another reason why this doesn't have value in my eyes. Because it's in no man's land. But my idea, you know, the message I'm trying to send across is break and retest happens every single time. Look at this. Breakthrough, respected, rejected, whatever you want to call it, neglected. Price that rhymed, continue to go further down again, but obviously the zones itself. But I'm trying to say, you know, it happens every single time. That's even if it's something messy like this. Normally people get intimidated by this. Oh no, look, consolidation, huge wick rejections, market's really choppy. What I see is this on this simple. I'll draw it like that. I'll get another one, clone this, something else that's sticking out. Yeah, look at this. Rejections, you know, breakout, support, respected. If I do this, rejected again, let's see. Beautiful. Look at this. Support and resistance. Yes. The only difference between support and resistance, or you want to call it, or zones or supply and demand levels, it's not clean, but I can still see through it. Why? Experience. That's all there is. Now, speaking of experience, guys, I normally, if you want to join the link in the description, guys, I've already put it there. So this is the mentorship. If you want one-to-one mentorship, if you're still struggling, you're looking for, you know, you're strategy hopping, you're confused, you don't know, these are just students passing challenges. Even some of my payouts, I keep that very private, so I'm a very private individual. But you've got, you know, challenges, certificates up here. So, you know, I just want to come and say hi, guys. Come and say hi. We work with 408 members, so you can join. And so yeah. Okay, now coming back to the point, we're 4 minutes in the video. I want to keep this video nice, short and simple. I want to see what, you know, if we keep the videos short as well, what kind of, you know, response the videos get. Normally I do keep them long, but I don't want to bore you guys as well. So, okay, let's delete this. No, I'll just keep them there. And what we'll do is, okay, another thing, guys, the 99%, what do they do that the 1% don't, right? The 1%, what I teach my students is, the way I draw my zones, and they you know, they witness this, the way I draw my zones is something that you've never seen before. It's something different. The way I take my entries is also different. It's not textbook. My entries are not textbook, right? is different. They're not out. You won't see the way I take my entries by, you know, and I take them like it's written on concrete. I take them like it's you most likely will be aware of it. It is a function that is accessible to obviously every single one. It's not something unheard of, but at the same time it's not normal. It's not normal. To be that 1%, you've got to do the things that the 99% don't do, guys. Now without wasting any time, let's go into this. So okay, I won't continue from here because this is the reason why the zones were created in the first place. We get the breakout here, price comes back into the zone. Now what kind of a, if I go to the small time frame, let's look for the entry candles. Now bearing in mind, guys, this is not the strategy I use. I do trade the break and retest, but I trade in a totally different way. Okay, so small time frame. So we can even go to a small time frame. I'm getting rejection, wick rejection, bullish candle rejection here, and price just if you just even went on this bullish candle forming here, bearing in mind you have to wait for the candles to close. Take the entry straight after this one, wherever that would be, then wait. Let's just say you was waiting for even a smaller confirmation. Let's see what the smaller time frames offer. Right, smaller time frames, let me drag this across. What they're offering right now, we've got a bearish candle with rejection, we've got a bullish candle as well, equal low pattern formed here, one of my favorites, and then we've got a long wick rejection at the bottom here as well, but this is also consolidation forming as well, so you gotta be careful. Now bullish candle here. Now price entered off this candle bullish, or even after this one, so maybe further up a little bit. And if you was to even go to a smaller time frame, look at this, guys, a morning star pattern forms and an engulfing bullish forms here, so all good, and you can just take your entry from there and price just continues to shoot in your desired direction. So if I just press play, let's just keep going. Remember, we already added we've got a bigger time frame, so the candles move a lot faster. Whiz through this. Now remember, I'm already 15% down, right? I'm already 15% down, so this was able to give me a 1 to 5 minus 10%. all good. Okay, minus 10% now, and then I get another opportunity. I get a breakout here. Now normally if someone sees this pattern, this evening star here, oh okay, and look at this, guys, no wick rejection at the top. This is a strong breakout candle, beautiful. It's also on the 1 hour time frame. Evening star looks like, but it's not the best evening star. Normally I prefer if it to be an evening star, the bearish candle to be a lot further down, or even somewhere near closer to this, the start of this candle body here, but in this case it wasn't. So this is not the best evening star. So what do they tell me? Sellers are still weak, and obviously as you can see, there's a wick rejection at the bottom here, quite a decent size, and almost similar to the top one. So for this one I would wait. Now you see this strong bullish candle here, huge long wick rejection. The wick rejection is bigger than the body of this bullish candle here. That is my entry signal. I've also noticed with experience, normally the candles, after you got your signal pattern, the candle normally does retrace. The next one I'm talking about does normally retrace up to 30%. In this case it almost does that, or pretty much does that. You can take your entry from there and price just go. So this one will give you a 1 to 3. Now in this case, guys, I'm only looking for 1 to 5s, so we can't cheat. It's a loss. So I was minus 10%, now I'm minus 11%, right? So price breaks through again, we get the okay, beautiful. Okay, perfect. Bearish candle here, right? This is a bullish candle. Now this is a bullish candle, so you might be thinking, oh no, why should I take an entry for a sell? It's a bullish candle. Yes, it is a bullish candle, but it's not the best. It's got quite a decent size wick rejection at the top, and second, it's closed below the psychological key level. None of these candles ever closed above this key level here. So for me, and look at this, the next one again, it's a bearish candle, and the wick rejection is even bigger. Price did push, the buyers did push price, further up, even higher than this wick. So in this present moment, guys, let's just try to visualize this, right? In this present moment, you know what it would look like? Okay, yes, the buyers are taking control. They're pushing the market higher and higher. We've even broken the high of this wick, eventually for the price to close bearish and tank further down. So that's why you also have to wait for the candle to close. Always have that patience. You could have even entered from here. This would have been more safer. I'm not a believer of, guys, oh yeah, this your stop loss should be above the wick from here, it should be even further up. Nonsense. I do my strong back testing, which I'll even show you guys. One moment. Look at this. I've got my back tested data, more than 500 trades back tested, more than 500 trades back. Look at this, 534, more than 500 trades back tested. I even have them. I jotted this manually myself on Canva, so I wanted to see my wins in how many wins take place in a row, how many losses take place in a row. So I've got my data, right? So I do everything the proper way. So look at this. I have a fixed stop loss and I have a fixed TP. So what is it? 12 pips here. So this will also be 12 as well, which is if I move this further down, you know. And why do I have, by the way guys, why do I have my stop loss a fixed amount? This should indirectly, guys, I'm telling you what I'm trying to, the message I'm trying to get across indirectly, not just to yourself, even to myself, right? From my backtested data. On average, I know the market has to move 12 pips, 12 points, whatever you want to call it, for me to be, for my, my bias to be wrong, right? My bias, my thought process, if it triggers my stop loss, I'm in the wrong. I move on to the next setup. So I realized that if the price moves 12 pips against me, then price has other intentions. That's what I'm trying to get across. Now I'm looking for only 64 pips, which is a 125. That's again my 125, right? 64 pips because 12 pips stop loss times 5, that's 64.3. So what I'm trying to say is, on average, I've seen that the market moves 64 pips on average. So that's what I'm trying to capitalize on. I could have easily gone for a 1 to, we would all like to go for a 1 to 10, right? But I've worked out from my back testing, for example, I don't trade GU by the way, but I'm just giving this as an example. I've worked out and realized the best number for me in GU's case is a 125, 63 pips. On, that's how on average what it moves. It doesn't move 100 pips. It doesn't move, well, it moves 22, but if I leave it moves 22, I'm leaving money on the table. The best number for me would be to get my 1 to 5 is 64 pips. That's how I work it out. I have a fixed stop loss, strict rules. I'm a man of restrictions. My trading plan has restrictions. That's the best way. Okay, I've even forgotten the number, guys. So I think this was from minus 15, this was minus 10%, minus 11, minus the 5, so we come back to 7 with 11, so I'm guessing 6%, minus 6%, then minus, okay, we got another one here. So this is, I don't want this. Oh, actually, let me, does it go higher? I've totally forgotten. Okay, yeah. Actually, does it give the 1 to, yeah, it does give the 1 to 5. So okay, all good, all good. So price does come up here, then it tanks down, so don't worry about this stop loss getting hit here. So it was a minus 5, so minus plus okay, we plus minus 1% now. Price keeps going, and then blah 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 blah. You get the gist of this, right? Okay, let me go here. So how do you not be part of the 9%? Now the thing about, you gotta, and you gotta take entries in a different way. You gotta draw your zones in a different way. You gotta mark your stop loss on TPs in a different way. You gotta do everything different. And I'll give you one way that what I do. We are always told in the books, right? Online, by the way. What I mean by that is online, on YouTube, whatever you want to call it, by if you're taking a course. Sell at resistance, buy at support. So, and the second thing that we're told is always catch the low. So in this case here, market's bullish, take a sell. Eventually, it's gonna eventually have to come down. Like, it's eventually gonna have to do this, go a little bit higher, and then just start tanking all the way down. Wrong. You must have heard, obviously, everyone's heard of this. The trend is your friend. Ride the wave. I don't care if this rides all the way here, keeps going higher. I'm not gonna go for a sell. I used to do this. I used to go for a sell. I don't do that anymore. I don't never have this fear, guys, that looking at the highest previous resistance point, or the high high. Don't be like, oh, what if eventually it's going to go low? No, you always see go off what price is currently doing in the present moment. Even if it's market showing me this, price is showing me this, I'm still gonna buy. Even if it's doing all these buys here, going higher and higher, I wouldn't care, guys, if it went all the way even further there to the moon, even past the moon. When the market is bullish, keep buying. When the market is sellish, see, I'm speaking now. The video's gone on long enough. I think that's why. Okay, when the market is tanking, keep selling. But my whole idea is this. But with my strategy, guys, the way I teach, the trend, if you watch one of my previous videos on a 50k account I was trading, we went to hit a 1 to 5. The trend doesn't affect my strategy. I just go off my rules, and that's what was able to make me a 600k, 600,000 funded trader. Still aiming for that, going for that 1 million mark. But it's not even about numbers anymore, guys. If you're successful, even if you're able to leave your 9 to 5 and able to help your family, and that's the whole idea behind it. If you're able to put food and if you're able to put food on the table, that's the whole idea. You're not trying to roll around in Lambos with hang around with 100 pretty women. It's not about that. It's not about that. If you can take care of your family, brother, you are success. Sister, you are success. Simple. That's just the way I look at it. Amen. So yeah, that's I hope you found value from this, guys. Take care, and yeah, as you can see, even we destroyed that minus 15%. Even if if I was to do this, guys, that's even minus 20. Trust me, break and retest works. I have a certain risk management plan as well that I apply, and that's why, you know, even some of my students, even including myself, guys, even when we start an account, we don't even see a minus 3%. It would never be a minus 3% drawdown. Our risk management plan, the way we approach it, excuse me, having a good strategy, good, you know, it's great, awesome. Having a good strong edge, perfect. But you know, it also comes down to your risk management plan, and that is the true king. That is the real winner. Well, it'll definitely make, that is what it will definitely you know, make you the winner. So I hope you found value. I'm dragging this video on too long, guys. Take care, and as always, I'm out.